In the cities, both Toronto and in Vancouver, the lowest is Vancouver. 12.6% of our sample was obese, whereas in the suburban area in Vancouver, it's almost twice as high, 22%. These are really extreme differences, and I always wondered, studying this in Atlanta versus Vancouver, what would the differences be? And what we see is, in Vancouver, we have a more extreme difference in urban form, and we also have a corresponding more extreme difference in obesity. That's interesting. In Toronto, the differences aren't as great, but there the pattern follows. Weekly automobile travel frequency, I just went through that a little bit, but it just shows the urban, you can probably read that. And then utilitarian walk frequency to destinations obviously would be higher where you can walk to places and so forth. So in summary, results again in both the US, now in a Canadian context, with different political environments, institutional constructs, and different ways of governance, impacting urban forms, shows significant, strong preference for neighborhood, pedestrian and transit-oriented neighborhoods. It's unmet. Preference for walkable neighborhoods are more prevalent, of course, among those who choose it, but there's a lot of people who trade it off in the suburban settings. The latent demand for more walkable neighborhoods is evident when considering both participants' self-described, how you perceive your neighborhood, or if you measure it objectively. I think that's an important distinction because both impact our behavior, and we need to understand the relationship between objective and perceived the perceived neighborhood factors are more closely tied to why you chose your neighborhood, and we can actually understand that, I think, the best. So I'm going to mention people who self-describe their neighborhoods, their perceived built environment, as more walkable, choose active transport modes more often, as you'd expect. And then participants living in more walkable neighborhoods choose active transportation more often. And I'll just kind of wrap up with a quick note, is that I'm sure that you've seen or are aware that there's been a couple studies now showing significant relationships with the deployment or investment in public transportation and health outcomes. I don't know if you're aware, but Charlotte, North Carolina did a pretty interesting study recently. There was a study on there before and after a rail line opened. And we're starting to see one of the best things that we can do to promote public health is actually invest in public transportation, because people who use public transit walk more. Obviously intuitive, but if we start to monetize the health benefits that come from transportation investments, we're going to be looking at a very different, and a lot of people are working on this. And I think behind all that is going to need to be evidence about the kind of environments that people prefer and don't prefer, and how that relates with the supply of what we build. Thank you.
Is there a slide advancer thing?
Yeah, there you go.
Thank you. Wonderful. I'm actually going to go on the side. Hi, everybody. I didn't hear anybody say hi back. Thank you. Hi, everybody. Much better. My name is Shyam. I work at RCLCO. We're a real estate advisory company. We were the bad people for about 40 years. We financed sprawl everywhere, West Coast, East Coast, North, South, Florida. Any Floridians in the room, by the way? You just killed the census. About an hour ago, your representative, Daniel Webster, sponsored a bill that killed the American Community Survey, which means that none of the charts and graphs that I'm about to show you will ever be able to be replicated again. So call and say, we actually need the census. One of the things that we do a lot of thinking about, where the market and where demand is coming from. So all the slides you're going to see today, we're still in store for charts and graphs. You're locked in a room, it's late, it's the afternoon, we're doing bar charts, I'll walk you through them. But what we're finding from a market standpoint is that this demand for walkability, this demand for new urbanist, for smart growth, whatever you want to call it, has been a constant, not just pre-recession, but post-recession. This comes from data that we actually mined back in 2007, 2008, from about 3,000 home buyers, when everyone had money. Asking them, where do you want to live? And you can see that there was an expressed preference to move away from a single-family detached home and into either a townhome or some sort of attached product. That preference has remained not only through the recession, but also post-recession. When we take a look at the most recent survey data that's come out from the National Association of Realtors, we find that that exact data point remains, that about 78 to 80% of American housing respondents indicate they currently live in a single-family detached home, but only about 70% want to live in that detached home when they move. Huge migration away from that product type, and that's the reason that you can see multifamily has been the savior of the current housing industry over the past several years. So what does that mean from an actual demand standpoint? What we see here is there's an above the line and a below the line. And what this is a description, or a depiction, I should say, of what the 2004, all these slides will be online, rclco.com, they're free. You don't need to take notes, or you can take pictures with your iPad. I think it's pretty cool, actually. But if you're above the line, what this says is that we have more demand than supply. If you're below the line, this says we have more supply than demand. And this is a depiction of what the preference for these different environments, downtown, a single-use residential community, rural community, a small town, which, by the way, if you take a look at the census definition of what a city is, you'll find out that 85% of all the cities in the United States actually have less than 25,000 people. They're very small towns. A mixed-use suburb versus a single-use residential suburb. Huge shift in preference away from single-use monoculture. This is 2004. Let's take a look and flash forward 2011 or 2010. The story remained the same. So for those of you who have heard from either financiers or the press or somewhere else in the media, Laurie, that somehow this was a function of a wealth economy, that's not the case. We see that in an environment where individuals and households have less money to spend, they still want to move away from monoculture and towards a walkable environment. A walkable environment defined as a place where we can actually access amenities without having to get inside our single-use personal combustion engines. Oftentimes, and I apologize for the, I'm not sure what's going on with the graphic on the far, on the bottom graph here, but oftentimes this data is accused of being slanted towards singles or young couples or seniors that don't have children anymore. So we sliced it down and we asked ourselves, is this really the case? What about our householders with children? Does family size make a difference? And we found out, no. Households with children, households that have more than one person in their house, more than one child in their household, continue to demand walkable environments. So myth number one, is this only about couples and seniors? Debunked. This is actually about all householders across all demographics. Myth number two, this is somehow a young person phenomenon, that only our young people want to walk around. Everyone else really continues to want to engage in the practice of purchasing 2 to 3 combustion vehicles and spending money on gasoline at $4.50 per gallon and being stuck walking or driving to the grocery store, driving to work, driving to the gym. That's my favorite one, driving to the gym. That's in fact not the case. That when we break it down by age, we find that our more mature householders are actually the primary drivers of our demand for walkability. And the other myth that we struggle with a lot is that somehow this is an income-driven phenomenon. That, in fact, it's actually driven by a lack of capacity to purchase a vehicle. If only folks had jobs, if only folks could purchase a vehicle, they, in fact, would prefer to walk. What we find is that when we break this down by income, in fact, the demand for walkability continues to stay constant across income bands. And just, I know that I've walked through this very quickly in the interest of time, but what we're doing is we're actually breaking down our household types, and I apologize for the left-hand bar, but our singles all the way up to our 4+ persons per household, our age groups all the way from our 18 to 24s all the way to our 75 pluses at the bottom, and then our household income ranges all the way from our below 40% of AMI all the way to our 150% of AMI graded by metro regions. So this is not an age a specific phenomenon. It's not a household size specific phenomenon. It's not an income specific phenomenon. It's an American phenomenon. That's one way to take a look at the data. And this is data that comes out every 4 to 6 years. Joe, I don't know if you're in the room here. If you are in the room, raise your hand. Joe Molinaro at the National Association of Realtors, we had the chance to work with him to craft that survey in 2010 to probe home buyers, and we have our own data from 2004, 2007. We also do a lot of, we try to walk in Laurie's footsteps. I think that you pioneered, you pioneered really psychographic analyses of home buyer and real estate marketing, and so we've tried to replicate some of that research on our own. We've asked ourselves, who are these households? where do they shop? Are they Republican? Are they Democrat? Are they church-going? Are they agnostic? And so we've examined the response data by psychographics. And psychographics is different from demographics. Demographics breaks down the world in terms of age, income, household size, location, et cetera, et cetera. Psychographics tries to tell us a little bit more about the motivations of individuals, and it attempts to group people into similar motivational categories. That's probably the best way to summarize it for anyone that's taking this data home. And we were shocked to find that the primary driver of these walkable environments didn't come from our 22-year-olds living in a condominium or an apartment, doing their work on a laptop in a coffee shop, or, for those of you who have children of that age, a 22-year-old living in your basement, pretending to work as they're trying to figure out what to do with their liberal arts degree. Actually, the primary demand for walkable environments came from, and I've used the word smart growth here in parentheses as a blanket term for all of our walkable environments. It came from psychographic groups. We could go into a discussion of who these groups are: high society, upscale avenues, our senior styles, our family portrait. In the description of who these groups are, these are not our latte-sipping, Saab-driving, condominium living urban anophiles. These are suburban psychographics, which tells us that there's a great demand for walkability from folks who currently are living in non-walkable environments, that we're probably focusing a disproportionate amount of our attention on investing in our urban areas, which are already solved. But the great planning challenge of the 21st century is, how do we bring urbanity to those folks who are living so far from urbanity today? Why is this happening? Well, it's happening because of demographics, of course. So we'll go back to demographics. This is a chart that shows you the number of Gen Y population entering the market in any given year. And for those of you who want a quick definition, Gen Y, we define them at least as those individuals who were born between 1979 and 1981, all the way up till 2000, at which point in time we end up with millennials. These are the individuals who are, as of 2009, graduating from college. For many of you, living at home. We had a very high percentage of these individuals who could not find jobs when they graduated from college. And back when we first took a look at this group in 2007, we assumed that they would be entering the housing market in 2012 as for-sale buyers. That's actually not the case. They're now entering the housing market en masse as renters, because they are finding jobs. Fingers crossed, everyone. Let's hope that the EU continues to not implode on a minute-by-minute basis. But this group does want to live in a walkable environment. 3 in 4 want to be able to walk everywhere. In fact, we take a look at the percentage of Gen Y that have driver's licenses. According to US DOT, about 26% of this cohort had driver's licenses in 2000. Only 21% do so in 2010. We can see that the number of those who use bicycle, who use their feet, who use public transportation to go to and from their daily activities has increased by 23% over the past 10 years. So this is a group that's decided the single-use vehicle is not particularly important to me. I can get around without using it, and I'm going to find a location that provides me that flexibility and that amenity. So we ask, how big is this market? What we have here, I've gone through and said, assume that we continue to chug along at an annualized rate of about 4.2 million residential transactions in the for-sale side per year, which may or may not be the future case, but has been the historical case. We can see that the market, based upon the different drivers of demand from Gen Y, Gen X, the Boomers and Eisenhowers, overwhelmingly tells us that there's a significant amount of demand for new urbanist, smart growth, downtown, walkable environments. And that the demand for these other environments is certainly on the wane. This is just from the for-sale side. This tells us that about half of all for-sale demand wants to get out of the cars and walk. When we take a look at the rental market, that becomes even more pronounced. For sale, for rent. For sale, for rent. 12 million transactions per year. We are not building nearly enough stock on the rental side to accommodate demand from those who wish to get out of the cars or not have them at all and walk. I know, Kennedy, you talked about Zipcar, we've talked about car sharing, we've talked about bike sharing, we've talked about urban areas where 50% of all trips are now conducted without the use of a vehicle. Huge numbers. And when I share this with the folks at my firm, the response is twofold. From the folks we hire who are 22, 23, all the way up to 30 years old, coming out of college or graduate school, they nod their heads and say, oh yeah, absolutely. I don't own a car, I don't have a driver's license, please don't send me out into the field because I wouldn't know how to drive. And oh, by the way, as a company, our corporate liability has gone up because our kids keep getting into accidents when we send them out into the field with cars. When I tell this to our boomers who have owned the company for years, they shake their heads, oh, no, 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 that's a fad. So part of what's going on in the real estate economy, which understand only reinvents its stock at a rate of 1% every single year, is those that are the owners of development interests and financing continue to disbelieve the data. I think that they're going bankrupt at a remarkably fast rate. And then there's a cadre, of course, of multifamily largely, but also single-family developers, small and regional scale, who are capitalizing on this, and who, by the way, are the folks that made money during the recession. We'll talk about transit very quickly. How important is transit to this? We found out that about a quarter, 1 in 4, Americans want to be able to ditch their car and walk to fixed rail transit, not bus rapid transit. I have not been able to underwrite a single dollar investment in a rubber tire system, but I can underwrite billions of dollars based upon fixed rail. But a quarter of all Americans want to walk to fixed rail transit. Again, like the previous data, this does not vary based upon age, it does not vary based upon income, it does not vary based upon household size. So when we think about the amount of Americans that actually live within proximity of fixed rail transit, which is sub 1%, versus the number of Americans that want to live in proximity to fixed rail transit, we have an explanation for why in Minneapolis, the Southwest Rail Corridor, which was shouted down in a very vitriolic Tea Party-led election year battle, is now coming back to life, but being funded by local taxpayers. Why in the Hampton Roads area in Virginia Beach, the extension of the HRT, and I see Joe over here who's nodding his head, but that deal was voted down in 2009, I believe, and now is coming back to life and has been voted and is being funded by local taxpayers. There's a tremendous amount of demand for walkability to fixed rail transit, which creates real estate value for developers and also desirability for consumers. And again, it doesn't vary by household type. And again, much like our analysis of the walkability index for all household consumers, the drivers of demand, we thought that the drivers of transit demand would continue to be younger, singles, couples, non-traditional families, perhaps some boomers or seniors without kids. And we thought that this demand for transit would come from those groups. We were wrong. In fact, the demand for transit is coming from our fastest growing demographic segments, our family-aged households with kids and tremendous amounts of wealth. So we can see here in this slide, the single biggest contributor to our transit-oriented demand comes from a life mode that at least Esri, and if you're familiar with psychographics, great. If not, you can download it from the Esri website. But the single biggest driver of demand comes from this group that they call high society, who this is their demographic. They're not unemployed, they're not young, they have kids, and they may have made choices in the past 10 years that they now regret, but they want transit. The second group comes from a more working class segment, but also that we traditionally have counted as suburban. So we're not really dealing with that group from a planning standpoint. We've ignored them. We've really assumed that we should be focused on urban planning, which we are doing, but really we should be focusing on suburban planning and finding how to bring urbanism and transit to the suburbs. What about jobs? Last question. This is stuff that we're just rolling out right now. We've been able to analyze databases of 12 to 13 million job points that are classified every single year. And I think, Kennedy, you mentioned this. A lot of the Gen Y are entrepreneurs, right? There are 23 million businesses in this country. Only 6.5 million of them have payroll, which means everyone else is working for themselves. But in the meantime, we're looking at payroll employment. This is some data that came out of Salt Lake City. What we found is that 20% of the job growth in Salt Lake City and the Wasatch Front actually clustered around these quarter-mile radii of transit stations, both existing and proposed, over the past 7 years. This is Utah. These are not just Republicans. These are Mormon Republicans who demand transit-oriented employment. Huge captures when you think about the fact that the land area here in the Wasatch Front comprises 0.4% of the land area in that MSA. Jobs want to be near transit. I'll skip this one. This is a terribly uncouth diagram. I apologize. But we broke it down by industry category. And it's high-wage jobs, by the way. We've also been doing some analyses for different jurisdictions. This is some work that we did for my new hometown in Washington, D.C., where they had asked us how many jobs have agglomerated next to a new transit line that connected disinvested parts of what now is a very hot economy, but 10 years ago you wouldn't have walked down these neighborhoods without a baseball bat and a flashlight during broad daylight. And what we found is that half of the jobs in the Washington, D.C. economy were added within a quarter mile of a new transit line. 50%. That's a huge number. And those jobs were actually private sector, high-wage professional jobs. So we now finally have the data to say that it's not just about households where people want to move, but it's actually also about the jobs that drive our regional economies. And so to close, I think, Laurie, I just hit the time limit, or I think we're in 30 seconds? Okay, good. So what keeps me up at night is the following. Are we asking the wrong question? As a group, we're out there beating this drum saying folks want to walk, folks want transit, folks want to be able to get to and fro without using personal vehicles. That is very 1985. That story's been told. Let's move on. The story now that we have to focus on is how do we bring the environments that are so much in demand to a household base and a jobs base in the United States that has made fixed decisions? How do we tell our transportation planners that come to us and say, sorry, you don't have 40 dwelling units per acre, I can't make that transit system work? Go back to their drawing boards and figure out how to make the transit system work, because it's a demographic that not only wants it, but is willing to pay for it. That's what keeps me up at night. And I think that we're done.
Okay. That's a lot of information, so I'm sure you all have a lot of questions, right? This was, do any of you have any experiences on your own that would either agree or disagree with these findings? We'd love to hear from you. Guys, you got 10, oh, question? Did everybody hear that question? Okay.
I'll go for it. You want to go first?
Yeah, I'll just within the continuum of walkability, it's obviously you're talking about a product that's kind of in the middle, a little bit, literally geographically, and for all the measures. So it's not just the extremes that we looked at. We had a whole, I just showed you a continuum. I showed you the images, but we actually had a Likert scale, 0 to 10. So all of the points in between are captured in our analysis. We are intentionally bookending for comparison. You're right, but that product, it's right. You're right onto a good line of reasoning, which is that there's more market and it satisfies potentially a lot of the travel behavior side could, but not enough, actually. There's higher densities necessary to make the transit work, and we'll talk more about that.
Sean?
Very quickly, one of the reasons our private developer clients are having a very hard time capturing move-up late-stage Gen X and move-up early-stage Gen Y is because those demographics are moving into our inner-ring suburbs and repopulating them at drastic rates. So I encourage you to take a look at school enrollment in most of the American, and I apologize, most of the United States. Is there a word for United Statesian? No. Estados Unidenses in Espanol, but there's nothing. Yeah, but he's from Canada. It's also in America.
In Canada, they think you dropped the A.
Oh. Well, anyway, look at school enrollment stats, and you will find that most inner-ring suburbs are opening up schools that have been shuttered for 50 years. Yeah. They have no idea how to accommodate surges in school enrollment, and it's this acceptance of those inner-ring suburbs, smaller units, smaller lot sizes.
Actually, in Vancouver, in Seattle, I'm told as well, and I guess many of you know stories elsewhere, the gap in the market are larger unit home apartments in the urban core for families. And in Vancouver, we now have, you probably are aware, but there's maybe 50 to 70,000 households living downtown now, huge urban core area with their families. There's a lot of schools, and that's the challenge. But that's not the product type you're talking about. A piece of land in a small lot with in a reasonably walkable place.
Like the classic first ring suburb of a city.
Those places are worth a fortune.
Yes.
Especially looking at the preferences across all the different groups, and at the same time you look at the existing stock of housing we have. We don't live in urban area, we live in a very suburban community in Florida. What's the future for those sprawl-based existing communities that make up the bulk of what we have in our housing stock
Right.
based on those preferences?
Right. The question is, what's going to happen to all of those larger houses built on the edge of cities that are not in demand anymore? Okay, speculate, folks.
There are some researchers who have prognosticated, indicated that many of those housing units will need to be demolished or converted to affordable housing. I don't believe that. I think that price is a great equalizer. But Florida is fortunate in that it continues to be a magnet for domestic migration. Michigan is not so fortunate, nor is Ohio, Indiana, Minnesota, Missouri, Illinois. We have some issues with that larger form, larger lot development. The St. Louis suburbs out in West St. Louis and West County, that housing unfortunately is going to continue to drop precipitously in value to the point where it either becomes converted into affordable housing or it becomes demolished outright. I know that there was a research study that came up from the University of Chicago that did correlate a walk score with foreclosure incidents. And so now the underwriters are realizing that the lower the walk score, the higher the propensity for foreclosure or underwriting risk on those assets. So it's going to be market by market, but it's not good.
This foreclosure walkability connection is a little bit complicated, though, because most of the loans that were written in the outlying areas are newer and were more leveraged. So when you tease out the leveraged effect, you got a bunch different. I originally believed that was the case, and
Yeah.
I think it is. I think there is a relationship, but it's not as ominous because actually it had to do with when the loans were granted and the underwriting practices when those occurred, which is most recent.
But I
So
believe that the
that
Chicago-
reduces the effect.
The Chicago study did compare conventional to conventional, so we can assume even though they may have been underwritten in different circumstances, they were still conventional loans.
Okay, we have 3 questions. We will take them, and then they're going to chase us out of here. Ellen, go ahead. Your hand was first.
Thank you for 3 great presentations. My question is, why is it that we see when retailers, I think, have totally understood the generational changes and are doing the kinds of stuff you're showing, Kennedy, are certainly not quite that broad spread, but it's happening. And they've already understood that malls, we haven't opened a newly closed mall since 2006, and things are changing. But the Home Builders Association gets the same information, gets all this, all the stuff that RCLCO is telling us and everything. And yet, over and over, we hear from the home builders that, no, there's still a market, no, it's not really changing. Is the retail industry more progressive than the home builders industry, or in a market?
Go ahead, Kennedy.
Well,
The answer is changing, it helps us change it.
yeah, I'll let these guys speak to the housing aspect of it. I mean, I think that we forget sometimes that innovation actually does occur in the retail sector. I remind people periodically, to our collective horror, that Walmart began as a small, independently owned downtown store, department store, and it grew into obviously this giant behemoth. But that's how it got started, and it actually turned 50 years old this year, along with Target and Kmart. So innovation does happen there, and I think it's because retail, like I said, retail is a market follower and not a market leader. So it's because retailers are seeing a change that they're responding to. I don't know what the story is on the housing side, though. I don't know why we're getting a product that there is diminishing demand for.
The housing side comes down to really 2 factors. Number one is the financing of the different enterprises. So on the multifamily side, really it's an income-producing asset, and you're using income-producing financing and debt. And so that actually needs to be a 5 to 7 year asset class from a debt and equity perspective. On the single-family side, those are really 15 to 20 year development horizons, both from the development side as well as from a financing side. Huge lead times, and the only way to make money doing single-family stuff is to secure land at very low cost, entitled over a long period of time, and execute returns that in a bad economy are 8%, in a good economy 18%. And so in some way it's the very nature of the business which necessitates those enterprises, which only comprise 20% of the total only 20% of all housing delivered is from the big nationally traded home builders. But that's actually how they're built. There's no other way for them to make money. But we do see that before the bust, both KB and Toll did venture into an urban product. KB's venture really imploded on them, bad timing. They were trying to pursue those ventures as home builders, which is a problem, as opposed to picking off individual assets. Toll did better, especially at the Naval Yard in Philadelphia. Now they're expanding their urban product. So they're trying to figure out how to do it, and we can only help them along the way.
Well, and there is a shift. If you look at the proportion of homes built in different types of settings, they have shifted. There is a much higher proportion being built in more walkable places. We're seeing that in most regions. So that is happening, not fast enough. And also, when you talk about where people live versus where they shop or where they work, like in Salt Lake, there's some nimbleness, not where I live, but it's over amplified. It's not. You're right. There's a bigger gap. Yep.
I would add also that on the retail side of things, that there's a different set of drivers that makes community leaders inclined to accept certain kinds of commercial development, freestanding, monopurpose commercial development, than is the case with housing. We still see community leaders being duped by the promise of lots of jobs and, with a big new business, which just doesn't pan out because of the sequence of where those benefits and costs accrue that they're not seeing. And that's, I think, a big difference in retail development and housing development.
Good question.
Okay, we did have 2 more questions. So, yes.
To add to the conversation, one question ago about housing stock that may not be desired in future generations is overbuilt and what may become of it. I believe there was a report in 2010 by the Urban Land Institute entitled Housing America in the Next Decade, and that posited the theory that a lot of that housing may be attracted to larger immigrant families that are more accustomed to living together across generations and throughout time. So that may be one report to look to further guidance that conversation.
Okay, thank you. And there was one more. Yes, Tom.
Well, I just wanted to follow up. You said, in relation to what you were just speaking of, that some of that overhang housing, some of the number of 120 million mansions will end up being either demolished or become affordable housing. There's no way it's going to be served by transit. So that's why it's basically a lot of what people have been talking about today. And therefore, if it's affordable housing, it's not going to be affordable living. So I think it's sort of like that spiral in a way. The more expensive oil becomes, the more transit-oriented we become, the less attractive those housing becomes.
Well, I had a question about a comment that you made with everybody wants to be near fixed rail.
So do I get 2 questions then? Is that
Absolutely. So this, well, it's more like an observation.
Okay, good.
This notion that we're all going to be able to be near fixed rail and that's what everybody wants is really, I think we have to look to marketing to help us get past that, because we just have to make transit is transit, and if it's on rubber tires, it's actually more flexible. Let's face it, you don't have to have transfers. It costs a hell of a lot less to build bus rapid transit than it does to build rail. I don't know, the factors can be up to 20 to 1 or something. We're really nuts if we think we're going to be able to put our track near everybody's house. So
we could do this all day long, but the fare box recovery ratio of rubber transit is really only 1x.
Not true. Anyways, the fact is that you can deploy a lot of transit more than rail, and being near fixed rail. I think we talk about developers' willingness to build. People actually care about their time.
Yeah.
And we know that. And so it's travel time. Transfers cause time, and rubber tire can actually reduce transfer. I love rail. I think it's great. But if we're in the notion that we're going to build our whole world around track, that's going to be really hard.
I can only say that the way we built our railroad system in the early 1900s was through private development, that every single railroad system was actually driven by land development deals.
Sure.
There's not one bus network that's been driven by land development. And to this day, I have not been able to find one shred of evidence that says I can get
That's in
a
an
development
automobile-based
premium.
economy.
Well, in the 1900s, Henry Ford had yet to roll out a mass production line. So it's in a pre- and post-automobile economy. The issue becomes, I think that we get distorted evidence on the efficacy of the rubber tire system, which if you really want to make it work and you do calculate in the value of that dedicated right-of-way, and then do take into fact that even in the best system, the Eugene, Oregon system, which is the only true BRT system we have, the fare box recovery ratio is still 35 cents on the dollar, versus in some of the most poorly managed fixed rail systems we have, the fare box recovery ratio is 55 cents on the dollar. The efficiency and the economic arguments fall apart. I think when we do the apples to apples, we'll find that the private development sector will fund the fixed rail investments in exchange for the property development, and we can have a more economically operated system, whereas I haven't seen the evidence on the rubber tire side. I'm looking for it because I would love to see it.
Okay. Well, thank you, everybody, and thank you, panel.